Prashant Mangalam is here, and we'll have Reema join us in just a bit right here.
Yeah, Reema will magically appear in just a bit. She's somewhere around, we don't know, merging with the set this time.
You know, Mangalam, yesterday was a 200-point recovery from the day's low. Today, there is no such need to say off the lows or anything. It's a solid 150 points from where we left off yesterday. And it's all banks and financials.
Absolutely. You know, what's interesting is that yesterday we tested the lower end of the range. We bounced back from there. Today, we tested the higher end of the range. We broke out beyond that. 23,700 is what we're seeing on the Nifty, led, of course, by the Nifty Bank. We were talking about how if the market has to break out of the range, it has to be either the IT index or the Nifty Bank. Nifty Bank is the one which has said, you know, I'm going to, you know, take the honors here. But it will be interesting to see whether portfolios are feeling happy today or not. Because in a divergence, we have the frontline indices doing very well today, but the midcap index is down about 0.4%.
Yeah, sulking. I mean, the broader market is not doing as much today. Actually, market breadth is slightly negative. Yep. You know, the midcap index is down 0.5%. Small cap index is flat. So, yeah, I mean, you know, it's almost 100% financials led move. And we're not, when is the last time that you remember something like this, that it's not just, you know, even within financials, it's private banks, private financials actually. So, you know, take a look at the top 4 gainers on the Nifty: HDFC Bank, ICICI Bank, Shriram Finance, and I think Axis Bank. So these are the 4 names which by themselves are powering this 150-odd point move, and everything else is sort of taking a it's you know, the rest of the market is pulled when the Nifty Bank did not participate, and of course banks now pulling their weight finally. So a day's break yesterday. We were saying this in the morning that towards the end, in the last 30-40 minutes, actually last hour, banks did look like there perhaps was a little more left there. And it's sort of come back in a very, very sharp, strong way. As I said, market breadth is a little negative, and you know, it's okay. We can have one of those days where the rest of the market takes a break, and one of the underperformers, relative underperformers, which is banks and financials, they are participating and coming through. So that's going to be the focus here over the next 60 minutes in terms of how much more and which are the best ideas here as far as financials are concerned. Remember, you know, FIs are still at a net basis year to date, they're once again big sellers. And a lot of the selling would have gone on in financials. There is a lot of room. I mean, if FIs are back, and they've been back since the election results have come through, there could be a lot of room here in the financials for them to really return. So is this head fake, or one day or a week long thing, or maybe something a little more sustainable? That I think is what we're going to sort of decipher. People have been calling for this banks rally to come back in a strong way. Earlier, it used to be that, well, everybody owns banks, so who's the incremental buyer? But I think that space has been created with a lot of selling which has taken place, and I think some of that seems to be returning right now. And as promised.
Yeah, we have Reema magically appeared here. Reema, tell us, what did you bring with your magical spell?
Well, it's a bit disappointing, right? The day when you've hit so many milestones, 78,000 on the Nifty, on the Sensex, the Nifty touching 23,700, the advanced decline ratio is actually in favor of the losing side. You still have got more stocks declining compared to the number of stocks advancing. The midcap index is down 0.4%. As Prashant said, it's fine. One day you can take a breather while, you know, banks take top honors. But, you know, it's a bit disappointing, the advanced decline ratio. The small cap index, though, is holding up in the green with a gain of close to about 0.3%.
You know, for me, the most important thing, because it's a financials-led rally, and it is a financials-led rally on a Tuesday, which also is the financial services expiry, where does it go in the last hour of trade? Because the Fin Nifty comes up for you. The Fin Nifty is somewhere closer to 23,500. Remember, for the longest time, the Fin Nifty and the Nifty itself were at similar levels. Now the Nifty is around 23,700. The Fin Nifty closer to 23,500. 23,500 call writers are very active in today's trading session. So if we see, you know, a breakout above that, then maybe we could see a sharp pop-up on the way up in the last hour of trade, last 30 minutes of trade, so to say. And at the same time, if we break down below that 23,450, where a lot of put writing is there on the Fin Nifty itself, then maybe there could be a bit of a decline in the last hour as well. So where that goes is something we'll be watching out for. And in particular, what's standing out in today's trading session is that a lot of these sectors which saw big rally are now seeing some profit taking. Case in point, real estate. So pull up something like an Oberoi Realty, down about 4.5%. DLF, down about 2.5%. We're seeing some decline in the rail pack as well. So all these railway stocks are finally seeing some profit booking. I don't know whether we can call it profit booking or just a dip in an otherwise big up move that we're seeing out there. And macro tech developers, for instance, Lodha Builders, that is down about 5%, alongside all the Realtels of the world, which is down about 3.5%.
Absolutely, and I think PSUs as well, right? I mean, I think as you said, maybe a bit of a breather, a bit of a break. They've not defense stocks. I mean, I think that's a separate. You've got to carve out a separate category because those are, I think, the last I checked, still zooming. But the broader Nifty PSE index is down about 0.65%. I think the shipbuilders specifically are the ones which are still doing well today. They're off the highs though. Mitesh is with us to run us through what he'd want you to do. Mitesh, good afternoon. You know, the previous high is gone for the Nifty Bank. It's new highs. I mean, so why don't we start there? Financials and banks and what you're seeing. It's purely that bank-led rally today.
Yeah. So, Prashant, I think this is something, which we've been highlighting, that it is the, and in the banks also, you can say that it's the private sector banking space which is doing much better. You can see the chart of HDFC Bank and the others, and HDFC, I think, it's just breaking into, or in the budget breaking into fresh all-time highs on a closing basis. We've not had a daily closing for the stock above the levels of 17, 16, and we are right there right now. So maybe today will be the day. But what is important is that the long-term and medium-term charts have improved. So even if there's a pullback, the stock will eventually get past these levels, head towards 1850 plus levels. So quite positive over there. And therefore, I think, I believe that all this underperformance of HDFC, Kotak, ICICI, etc., will see some kind of a catch-up against the PSU banking names, and will keep the Nifty and the Bank Nifty both in good stead. On the stock side, I would recommend buying into Tech Mahindra with the stop at about 1400 for targets of around 1460 on the upside. And IT is also a good space to be in. And the other one is a sell on Oberoi Realty with a stop at about 1847 at a target of around 1760.
Okay. Let's, that's real estate. Let's talk about the telecom sector. Today, the 2024 Spectrum auctions begin. Ambit has come out with a note titled Positive Sum Game, which basically means we're now entering into an era where everyone does well. The key reason is that tacit government support is likely to drive sustained tariff hikes till 2030, which means it's not a one hike and done that the street is anticipating. According to Ambit, they're penciling in a 20% tariff hike in September of 2024. That's 2 months from now. And after that, once in every 2 years, they're saying we could see a 12% tariff hike till 2034. So the basic narrative is sustained tariff hikes from here on for the next 10 years. And therefore, they're now saying that the industry's revenue growth could be at about 13% for the next 5 years, which is higher than what they were earlier anticipating. And not just that, this is the mobility-led business. Telecom companies are also focusing on adjacencies, like home broadband is one big area. 2 is enterprise, where they are providing them services like data center, cloud communication. And also another area of potential income is that suppose if there is any form of internet tax on OTT players will have to share some of their revenues with the telecom companies, and that could be an incremental source. So these are some factors which Ambit believes will result in a positive sum game for the entire sector. So they're positive despite the FY24 re-rating. They've reinstated their buy on Airtel, which according to them is the best play on the telecom tariff reset and events like the Jio IPO. Bharti target price is 1,663. They've turned buyers on Vodafone Idea and Indus. On Vodafone Idea, target price is 21. On Indus Stars 2, it stands at 411. Bharti Hexacom, they call it a cozy duopoly in Rajasthan because it gets about 70-80% of its revenues from Rajasthan, where there are just 2 players, and Bharti Hexacom is the market leader. So it's a pure play on the rising telecom tariffs and the reset. So bullish on Bharti Hexacom too. Reliance is a sell though at 2,600, so downside from current levels.
Rather interesting, and what interested me the most was the possibility of an internet tax coming in from the OTTs going into the telecom space. Let's welcome Deepak Shenoy, who's the founder at Capital Mind, joining in now on the show. Good afternoon, Deepak. Always a pleasure speaking with you. What are your thoughts on the telecom space? I mean, earlier it was just a 2-horse race. Now suddenly we have the big up move that we've seen in Vodafone as well. A lot of the brokerages now becoming positive on Vodafone. So now it's extended to more than 2. And if that is the case, then would you look at Vodafone, which is a low ticket item with a big upside potential, or do you look at Bharti Airtel as a stable compounder?
So honestly, Mangla, we have Bharti Airtel and Reliance in our portfolio. So we don't have Vodafone. There's a specific reason because I think Vodafone is going to have liquidity issues going forward. Now, what they've done is they've issued a truckload of shares. Those shares add to effectively the overall equity, right? So when you start getting earnings, whenever they do at some point, it's going to spread across a lot more shares than was earlier envisaged. So even if they can convert some of their vendor payments to shares, that just increases the pool of shares available. So you're diluted even more. More importantly, the government hasn't backed off from the obligations that Vodafone has to pay, which I think starts from next year and goes onwards, increasing at a fairly large clip, I think 40 odd thousand crores per year. They have actually made their debt profile worse. Earlier, their debt was primarily a very small amount to banks. Now they've added another 10, 14,000 crores or so to that SBI loan, which actually makes them even more leveraged in that sense. And also, their equity is negative. They have a very deeply net negative equity balance sheet. So effectively, they're technically insolvent. They don't have any shareholder equity. It's negative right now. So to be able to bring that back to par, they probably need another 40, 50, 60,000 crores in equity alone just to bring shareholder equity to zero. And then, then they'll talk about, positive returns and all after that. I believe they're going to struggle, although I think now is a little bit of a honeymoon period for them because they've kind of got some reprieve and they've been able to do a rights issue and or an issue as recently as I think a few months back. I think going forward they're still losing customers, so the core business is not doing very well. They haven't yet talked about how they're going to invest in some of the new technologies that they're going to need. It's going to need a lot more capital than they've raised so far. And I think there will be a bunch more liquidity issues. So I don't like Vodafone per se. I know the market kind of seems to like it even now. But I believe the beneficiaries of that will be Bharti and Reliance in that context. So we're long on those. So I'm biased because I have those shares, not Vodafone.
No, absolutely. and why not? Deepak, coming to you, but I just want to go across to Sonia first. Amar Raja, of course, has been in focus all day today. And there's a technology tie-up which they've entered into markets, of course, giving it a big thumbs up. Sonia, tell us more.
Well, thanks a lot for that. As you rightly pointed out, it's a big thumbs up to this particular technology arrangement that Amar Raja Batteries has signed with a Slovakian company, GIB, which is Goti and Inobat Batteries. Now, this is for lithium-ion cell battery manufacturing, and they're working on advanced technologies, whether it's electric vehicles, electric aviation as well. Now, Amar Raja recently upped its stake in this company, Inobat, to 9.3%. It invested 20 million euros for additional 9.3% stake. Now, Amara is going big in this new technology space. So they recently invested 9,500 crores in Telangana for advanced research and innovation. And a lot of brokerages are bullish on the stock. Investec has a buy, JP Morgan has a neutral. They say that the company is taking all the right steps and they are confident about the company's ability to progress towards the 16 gigawatt capacity target. They are also, all of this also enhances Amar Raja's capabilities in transitioning to lithium-ion cell manufacturing. Now, if you look at the stock is up almost 80% in the past 6 months. It is quite expensive, but it still trades at a discount to its peer like Exide. So if you look at, the move right now, Amara is still trading at 23 times forward, while Exide is trading at 31 times forward. This is before today's move. So, of course, narrowing a bit of that valuation gap with Exide, but still trading at a bit of a discount. Back to you.
Absolutely. Thanks very much, Sonia. Very helpful. Deepak, do you own either Exide or Amara?
We own Amar Raja, ARE and M here. We own it in two portfolios, actually. One is a momentum play, but one is also our long-term fundamental play. We picked it up a while back. The idea was, of course, that they were actually a little bit further in the electric battery space. So lithium-ion, they were doing a little bit more work than Exide at the time. And I still think that they have the potential for more capabilities. I think the recent move has been on the back of some political considerations. But I think from a core business, they have the distribution network of size that is required in India, if electric is going to get adopted from a transportation perspective, you're going to need your tentacles everywhere in terms of being able to service customers who have your batteries. And especially if you get into a particular area which is replaceable batteries for two-wheelers. So you're going to need, I think you're going to need a better distribution network. Some of the newer battery players have good technology, but not the distribution network. And I believe that plus their focus is to moving towards electric vehicle in different ways. Electric aviation was something new. I did not know that this was such a in such an advanced stage, but I think this might also be very, very interesting. Imagine planes flying electric. So I think that's an interesting new development. We own it, of course. It is expensive, but I think long term these companies. Both Exide and Amar Raja are probably much more valuable than they are today simply because of their reach across India.
Deepak, morning. Is Craftsman Automation a stock that you've looked at?
No, I haven't tracked it. It's been a while, I think 4 or 5 years back, but I don't remember much about it. Sorry, I don't have any information on that, Reema.
All right. What about Happiest Minds? The stock has cracked close to about 9% today on the back of that large block deal that we've seen where promoter Ashok Soota has brought his stake down. Is this a buying opportunity?
Happiest Minds, I think in general IT, we don't own Happiest Minds. I don't have a specific view on Happiest Minds itself, but I think the overall sector has issues. There have been, if you've seen the latest, even yesterday's release by the RBI of the balance of payments, you're seeing the IT export growth slow down. So it used to be in high double digits, 15, 17, 20, 22% for the last few years. But now it's come down to 7% year on year. And I think that is part of the contribution here is the slowdown in the US, the change in US spending patterns from a technology point of view, the advent of AI and the change in hiring patterns that we've seen across the industry. I think it will take till the end of this year before we get any reasonable amount of guidance for how they will see the industry moving next year. So while we have some of the larger cap players in our portfolios, I think we will, at this point, hold off on some of the mid caps and kind of wait till, the sector kind of evens out. It will take some time, I think, before margins start to come up again. They enjoyed a good margin period in 22-23. Now they're going to face the reverse of that for a while. And then I think from next year onwards, they'll start seeing a move up. That may be a better time to buy mid-cap IT than to look at it now. Nothing on Happiest Minds per se.
The gains in the financial space are now broadening out. We're seeing some pickup in housing finance space as well. So you look at something like LIC Housing Finance, that's moved higher and moved to the high point of trade. Just the last few minutes or so, we've seen a vertical up move in something like Canfin Homes as well, which is moved higher. NBFCs like L&T Finance, etc. are doing well. Shriram Finance, of course, we spoke with the management this morning. That's doing well too. And what's actually got my attention is the tire space, Deepak, because right now we're seeing an up move in all the tire stocks. Seat, for instance, the management had joined us sometime last week saying that on their current capacity, they can actually do 15,000 crore worth revenue. Apollo Tyres has moved to the high point of trade. MRF on its big base, now a 1,27,000 rupees stock. So we're seeing an up move there. Is there anything that you like in either housing finance or maybe auto ancillaries like tires, etc.?
So nothing in housing finance yet. I think housing finance has, there's been a priority sector reclassification of sort, but that doesn't affect housing finance too much. By the way, housing in general is growing, still growing very well, especially at the 50 lakh plus level in India, and whether it's at banks or housing fund companies. And the RBI has moved to cut personal loans and unsecured loans has resulted in banks pushing their secured portfolios to a much larger level. So I think that way, housing finance companies might see a bit of a a benefit in terms of more availability of funds for them from banks as well. But I don't have a pick there right now. I think Canfin's an interesting play. It's always been interesting. It's just relatively small. But on tires, we've been looking at the tire industry for a while. We are, of course, very interested in auto. But within the tire space, I used to have Balkrishna Industries, which is more a sectoral, a specific kind of a player, which is more about tires for construction equipment and tractors and non-standard tires per se. We haven't seen the bigger standard tire companies, the OEMs for cars and so on. I think this is an exciting sector, but we'll probably play it last. We bought the manufacturers first. We bought some ancillaries. I think the tires will come towards the end. So it's good to see them moving. I have to see whether the fundamental reasons are there yet. But we haven't seen that much growth recently. So we'll wait for some of the numbers to show up in the results. Maybe after July, we'll take a call on them.
Absolutely. By the way, Deepak, just an open-ended question. And have you added anything new, completely new in your portfolio since the last time we spoke?
I think, so we've very few stock additions. In fact, this month has been, kind of just consolidating and adding more to the positions we have. Some of the, I think we've focused on some of the themes around manufacturing. We're increasing some of the plays we have in defense and in the railways space as well, but also in hospitality. So I think last time I might have mentioned this to you, we added a hospitality player in the hotel space because I think given how travel is going and you can't find hotel rooms, you can't find airplane tickets for what used to be reasonable prices. I think this sector has got a long way to go. India is traveling and India is not stopping to travel. So we are more interested in that space. Might add, Indigo has been looking exciting for a while. So, it's just about the right time to buy it. Sometimes you identify a theme and then you have to wait for the players to look exciting enough for you to buy. We haven't found anything yet, but, still looking. And of course, in the manufacturing space, I think lot more to go. So whether it's companies like Keynes in the semiconductor space or other companies in the high-end machine and the engineering space, we've actually continued to add to our positions. I'm sorry, I'm not taking too many names because we're buying a bunch of them right now. But these are our interest spaces right now.
Does travel tech excite you? If you're looking at some of these names, TBO Tech, for instance, gaining for the second day running, we have Goldman Sachs initiating coverage on that. Then you have a bunch of other players as well in this space, which enable. Ixigo had a great listing last week.
Ixigo did, and I think that might be an exciting player as well. We also, we own RateGain. So it's one of the players in the space, but we haven't added any more to any of the others. Ixigo, you generally after IPO, we wait for at least one quarter's results to see how things pan out. Because then the prices stabilize. You get all the QIB players who have been jumping to buy at the IPO, which will come for selling just about a month afterwards. So kind of wait till all of that dies down before we purchase or make a purchase in some of these stocks. But we'll evaluate it after the results for sure.
All right, Deepak, great conversation as always. Thank you very much.
And congratulations, your PMS has crossed 2,000 crore in AUM and it's given a return of 30% every year for the last 5 years. So congratulations, well done.
Thank you. We're very small, so thank you so much.
Which means a lot of room to grow. So congrats, Deepak. Really appreciate your thoughts and wisdom over the years. Thank you. And look forward to our next chat. We'll take a quick break here. We have Vaibhav Sanghvi of ASK Hedge Solutions with us on the other side. We continue our discussion on markets.
Welcome back. Most of the gains are intact on the benchmark index, but a few railway stocks like IREDA, RVNL are under pressure. Stocks are down between 2 to 3%. Fertilizer names like RCF, NFL are weak. You're seeing cuts of close to about 2.5%. They were down yesterday, 5-6%, but there is follow-on selling seen in the fertilizer stocks as well. And metals on the whole is having a rough day. The Nifty Metal Index is down close to about 1%. But let's get you a CNBC-TV18 exclusive now. We learned from sources that the government might review the PSC policy. Tim C is here with the details. Hi, Tim C.
Well, as you rightly mentioned, what we are picking up from sources is that the government is currently mulling a review of the public sector enterprise policy, which actually spelled out the privatization roadmap. Remember, public sector enterprise policy was notified on the 4th of February 2021 during the Atmanirbhar Bharat package, and the review is likely to include revisiting sales of public sector enterprises under the policy. What we are picking up from sources additionally is that government may consider selling land parcels, etc., monetization of select assets, but it may pull back on the entire privatization issue. The political will is not in favor of exiting family jewels, and that is exactly why the government is looking or considering at such a sort of a review. Meanwhile, as we speak, no decision yet has been made finally on this review of the policy, but yes, sources are indicating towards it. Just to remind our viewers, government has already called off the strategic sale of BPCL. The scope of this PSE policy was to exit CPSEs, public sector banks, public sector insurance companies. The policy did not apply to certain classes of public sector entities, such as strategic sectors where government decided to have bare minimum presence were like atomic energy, telecom, space, defense, transport, power, petroleum, coal and minerals, banking, insurance, and financial institutions, whereas the policy laid out non-strategic sectors where it considered for privatization. So let's see whether this sort of a review happens. What is it that finally takes place? What sort of a shape does the review take to this entire policy? So that is something in offing.
So, Timsy, basically, this is, of course, both for already listed companies and private companies as well, right? Where there was...
as I said, the scope of the PSE policy was to exit CPSEs, PSBs, and public sector insurance companies. So it covers all. Covers
the entire gamut. Got it. Thank you very much. And I think, of course, we'll follow the story. But I think the first real indication of what the government really wants to do, and I think we'll get it in the budget, which is not very far away now. Really, direction for the next 5 years will be in the second half of July when the budget is indeed presented. Vaibhav Sanghvi is with us, CEO at Ask Hedge Solutions. Vaibhav, good afternoon. Good to have you with us here. It's largely banks today, so give us a color on what you are doing at Ask Hedge. Because the rest of the market isn't really pulling its weight today. It's purely banks.
Yeah, of course. I think Prashant, rightly observed that. But one interesting point I would, want to make here is that while today it is banks, yesterday was something different, and tomorrow is likely to be different as well. The point being that I am trying to say is basically from when we look at the benchmark indices. We are seeing pretty quick rotation in terms of these sectors, thereby lending good amount of support from to the benchmark indices from a shorter term movement perspective. While 23,500 looks to be kind of breached on the higher side, my sense is basically the momentum will is likely to continue and further accelerate, probably looking to churn in terms of the sectors as well. So. We will hear about these kind of stories, about a particular sector in terms of why the interest is there on that particular day. But what we can only say is basically that the frontliners are now getting better attention, from a valuation differential perspective as compared to the mid caps at this point in time.
So, Vaibhav, if the market continues to see a lot of churn, sectoral rotation in and out, how does one play it? What's the portfolio construct you would advise?
See, Rima, I think if you're trying to trade these markets, I think, and you keep on looking at the price and keep on rotating your sectors, then it's just futile. It's extremely important to kind of focus on what you like from a fundamental perspective. Keep holding on and just wait for that sector rotation to kind of get into your sectors or your stocks, when it comes by. So while the thesis is something there for a medium to longer term, my sense is basically it's just a matter of time. It will kind of catch up to your portfolio of stocks. So very tricky to kind of trade in and out on these kind of sectors, looking at just the momentum in terms of price movement.
So if you could then make it sector specific for us, what is it that you at Ask Hedge Solutions like as a house, and where do you find momentum which is tradable in the very near term, medium term and long term are the things that you like? Give us a sense.
So what we would probably here concentrate on, two larger themes. One is, of course, the upcoming budget. And we will eagerly wait for looking at the direction of the policy framework, in the sense that last 10 years has been extremely laser focused on supply side. We want to see that whether that continues or probably also or consumption gets some amount of attention as well from the budget perspective. While that is the case, our estimate is that the supply side focus will continue, the capex will continue. So we are bullish on overall capex industrials, Capco's kind of segment. At the same time, we are starting to get pretty positive on IT sector as a whole. So that is something which we like. Some rural focused themes, and tactically the private banks which may continue to trade higher, especially from the long side.
In IT, is it frontline IT or mid-cap IT? And what will be the driver of that?
I think our focus would largely be the frontline ITs at this point in time, because the bottoming out of the business story, I think, will attract a good amount of allocation to the frontline companies, where what we see is basically from both the foreign and the domestic investors. Both of them are underweight in terms of their portfolios. And when the business is kind of bottoming out, probably in a quarter or two, we'll start seeing those kind of results come about. But stocks will start moving in terms of the commentary, from these companies. So this quarter, probably we'll start to see that. And as one of the Accenture's commentary and the results actually showed that path as well. So we do think that in the initial part, it'll start with the frontliners and then probably trickle down over the mid caps, because there the valuations are a little expensive.
You said you're also playing the consumption theme. How are you playing that?
From consumption, if we look at, is basically we have to be a little kind of tactical, or probably when we talk about consumption, we may probably differentiate between staples and discretionary. And in discretionary, at this point in time, we are largely focused on the durable segment. Whereas in case of the staples, we'll wait for the quarterly numbers, and the first half of the monsoon is also likely to be a little weak in terms of the forecast, which has already been there. So once the results are out, we see some amount of kind of correction on these prices is where we would look to get into the staple segment. But otherwise, consumer durables is something which we are focused on at this point in time.
Rima, by the way, have you started getting expectations, IT? Just
No,
to go back to the...
yet.
Not yet.
No, not yet.
But expectation is building, at least at frontline IT, perhaps we will start to see some kind of
So, Q1 is typically a strong quarter for IT companies. So in that sense, you can expect numbers to be better than Q4. But I think, again, the street will, brace for commentary, right? Does the commentary indicate that things are picking up in the second half of the year? I don't think as of now in the Q1 numbers, based on what we've seen from Accenture and the likes, that you are going to see a meaningful pickup in the growth numbers. But order book needs to be strong. It's been strong for a very long time, order booking. So that needs to sustain. And two, I think commentary that things are on the mend. Maybe post-elections in the US, the client tap may open up.
Vaibhav, your call is not just based off of the first quarter numbers and what they may say, right, in terms of constant currency growth, etc. I mean, it's a slightly, the call is that things will turn in the second half.
Of course, I think it's not only about a first quarter. I think, of course, right. Rima did mention about the seasonality. Of course, we have seen that Q1 is largely stronger, but few things that play here. As I said, large under ownership, from all the investors. To the valuations, this is one sector apart from the private banks, which we have good amount of comfort in terms of the valuations. The cash flow yields are kind of pretty attractive. And in a light where you are not seeing any crash in terms of the global economy, plus the fear of artificial intelligence kind of cannibalizing the whole business, kind of it's now over. In fact, it is trying to give you some good opportunity in terms of your order bookings. My sense is basically from an overall sector perspective, I think all the things are kind of getting in place. So that's a sector we would keenly watch on.
All right. Thank you so much for joining in. Insightful conversation here. Vaibhav, as we speak, the market is increasing its gains and it's improving its breadth as well. So we're seeing some more stocks add themselves to the gaining list. So the banks obviously were doing well. IT index has now moved higher. Reliance, the big weight, has now picked pace, currently at the high point as well. So all of that has taken the Nifty now comfortably above the 23,700 mark. And even in the broader markets, when we started the show, the midcap index was down about 0.4%. Now that has curtailed its losses to just about 1/3%. Midcap IT stocks, Birlasoft has now moved to the high point of trade, doing extremely well. And then we have a couple of these broader markets names. Gulf Oil Lubricants, for instance, up 10%, locked in that circuit. Godrej Agrovet, up around 7%. There's been a brokerage upgrade out there as well. So big move on that counter. Garden Reach Shipbuilders and Amar Raja we've been talking about through the day. And Westlife Food now stands out in terms of an up move because we've seen the QSR space so far see outperformance only from Jubilant FoodWorks and some weakness in Westlife. But now Westlife seems to have picked up around 5%. So that's the one that should come up for your screen, come up for you on the screen as well. So those are a bunch of stocks. And in otherwise weak, real estate day, we have Purvankara, which is actually locked in a 5% upper circuit. So that's another outlier in in a space where we are seeing weakness in today's trading session. Take a short break, come back, get you more on what the dealing rooms are saying in our special D Street chatter. Also tell you what to buy today or sell today for a reverse trade tomorrow. Welcome back. The 3 p.m. move on the Nifty Financial Services has been on the upside. The Nifty Financial Services has now crossed the 23,500 mark. Remember, a lot of call writing was visible at the 23,500 level itself. So the question is whether we see a blast up in the next 20 minutes of trade or not, because those call writers will perhaps have to unwind their positions. We're seeing further build up on the Nifty Bank as well, veering towards a 1,000-point gain today itself. Let's get in Nimesh with all that he's got from in terms of an insight from the dealing room. Nimesh, it's been financials, financials and financials.
Well, absolutely, and I guess to some extent it's also to do with the Fin Nifty expiry, because if you look at the top, top 10 gainers, the top 7 gainers are banks, and all are part of the Fin Nifty. So it looks like there is a bit of that element which is split out on the Nifty Bank today. But nevertheless, there is buying as well, is what I understand, especially in private banks from the larger institutions. I guess the record highs are there, and that's backed by FI buying as well. The only, so to say, sore point is a bit of underperformance in the broader market stocks. And again, for second day running, there is a bit of profit booking in the PSU basket. So entire PSU names is where some bit of, selling is visible from the larger institutions for the second day. I guess the trend of, large promoter stake sales, PE stake sale continues. We saw what happened to Happiest Minds today. The stock is down 10% on the back of that 6% large block from promoter. And that trend is likely to continue until the, cool-off starts in early July for most of the corporates. But I guess today's large move is in the financials, and to some extent is backed by FI buying and some bit of Fin Nifty expiry as well, which is split out on the Nifty Bank.
Nimesh, individual stocks, what are you picking up?
Well, a lot of action in the broader market stocks, Prashant. So the first stock is Welspun Corp, a big move on that stock and large volumes as well. I understand for the last couple of days, some domestic mutual funds were active sellers. Today was a clean out trade, so leading long only fund and couple of large family offices were big buyers, and hence you've seen a big move on that stock today. The second stock is Apollo Tyre. Even that stock has sharply recovered from the day's low at day's high now, and a large volumes backed by FI buying. In fact, the city is now anticipating some sort of price hike across the board from tire companies. So that's keeping that stock exciting. The third stock is Inox Green. That stock is buzzing at day's high. There is a board meeting scheduled tomorrow for fundraising. I understand some large market investors are likely to invest along with the promoters in the fundraising, so that's something to track there. And the last is, in the mid-cap space, there were a couple of large blocks in very small and mid-cap companies, the likes of Tilak Industries, Adani Services, Alchem Labs, and RK Forging. In some of them, the indication is that the promoter entity was a seller. So the disclosures on this mid-cap companies will be quite interesting post-market. But at least on few names, as I understand, the promoter entity was seller.
This the Inox Green bit, Nimesh, which is you said tomorrow. So there is this is a pref issue, and then you said some large investors are.
Well, Prashant, my sense is it's going to be a combination of both pref issue to promoters and non-promoters via warrants and could be equity, and there is a QIP component is what I understand. So some institutional investors will also come in, in that fundraising in Inox Green.
All right. Well, it's a buzzing, a vibrant market, Nimesh, to cover, and what a time to cover it, right? So that's absolutely the case. Well, thanks for that. 100 points, which means, by the way, the market's come off a little bit. Sorry, beg your pardon, 200 points. So 200 points in the Nifty is what we are trading up by. And I think the additional push, as Mangala was earlier pointing out, was basically the banks index, which is now zoomed up a little bit more. So it's 915 odd point gain, 52,630 is where we stand at. Now, let's go across to Yash, who's joining in from the sidelines of the Adani Group Media Meet, which took place in Ahmedabad. Yash, what are you learning? What are you picking up?
Well, Prashant, as we all know, this has been an interesting year for the whole Adani Group. We had the Hindenburg incident. Of course, stocks across board crashed after that. And since then, there has been a very, very strong recovery. So the media meet that we are participating in right now becomes very important from an overview point of view in terms of what lies ahead of the group. So far, we've had the flagship company, Adani Enterprises, finishing its media meet. And there are two important points that I want to highlight here, which sort of come out of this particular interaction. The first one is at FY25 year, the group is looking at a fundraise of nearly $2 to $3 billion. This will be through equity fundraise, and this will be at a group level. Largely, the sense that one gets from the interaction is that this year, that is FY25, will be largely about projects completion under the various Adani enterprise entities and less about taking up new projects. FY26 onwards is when new projects would again start coming in. The second important part is with respect to airports business, which comes under Adani Enterprises. The management has said that an IPO or a demerger of the airports business could happen by FY28. So that's the next value unlocking proposition which Adani Enterprise would look at. As far as businesses under the group are concerned, there's green hydrogen, there's airports, there's data centers, defense and aerospace, and digital labs. The most interesting part came on the green hydrogen business, where the management has said that they target about 1 MTPA production by FY30 and 3 MTPA production by FY32-33. Now, remember, this is important because about 1 MTA production requires 20 gigawatt of capacity, which straight away means that the group looks to put in place about 20 gigawatt manufacturing or production capacity by FY30 to be able to achieve that production of 1 MTPA. Another important point on the airport side would be the Navi Mumbai airport from Adani Enterprises. The indication is that that will happen in the current financial year as well. Now, as we talk right now, of course, Adani Green media meet is ongoing. And there, of course, it will be very important because there's a very strong push coming from the group on the renewable energy side. Kavda, near the Kutch region, is the area where the company is focusing at, plans to put about 30 gigawatt of green energy production capacity there. So, of course, we'll have to wait for the interesting takeaways which comes from this very interesting business under the Adani Group.
All right, Yash, thanks a lot for that. So those are some updates coming in on the Adani Group. Meanwhile, bunch of stocks also spiking as we speak. We have Cello World, which has moved to the high point of trade. A decent traction is what we're seeing on names like Phoenix Mills as well at the high point for that counter too. And we continue to see some buying in names like PB Fintech, which is now up around 3.5%. So good time to get in tomorrow trade now. We have Mitesh Thakkar joining in to tell you what to either buy or sell today for a reverse trade tomorrow. Mitesh, I reckon with the way the market's moving, there will be more buys than sells?
Very clearly, yes. I think, but I have right now one sell call as well. I think Z is something which has weakened and moved to the lowest point of the day. So STBT here with the stop at 151. And look for a target of around 144. And Wipro is a BTST with a stop at 484.5 for targets of roughly around 503. Yeah.
Okay. Thank you.
503 for Wipro, is it?
Yeah, that's right.
The stock is at 497. Would you want to revise the target because it's seen a big...
So it's a BTS, it's a 1.5% kind of move you're trying to
Okay, cool.
All right. Thank you very much for that. Let's get to the big sector of the day, and that's financials. Abhishek is here with the latest on ICICI Bank and HDFC Bank. Abhishek.
Well, ICICI Bank today crossed the 100 billion mark with respect to the market cap. So it's now the fifth entity to cross that level after Reliance Industries, TCS, HDFC Bank, Bharti Airtel. Now ICICI Bank's market cap has crossed the 100 billion mark. I'll take a look at its journey towards that 100 billion. Every 25 billion, I tried to find the journey over there. So it crossed 25 billion as on 7th July 2007, and then 31st December 2020. It crossed the 50 billion mark. Remember that they had raised capital in the calendar year 2020. So the fastest journey of 25 billion has been in 2020 to 2021. So between 50 to 75 billion dollars, that's the fastest journey that they have seen. And now as of today, their market cap has crossed about 100 billions. With respect to other financial, SDFC Bank has gained in trade today. Bernstein has put out a note over there. They have an outperformance rating with a target price of 2,100 per share. They say that ROA will improve in the next 4 years, given the fact that loan growth will accelerate more towards the unsecured portfolio, or the high yielding portfolio rather, which will drive the ROA by 20 basis points for them. Cost of funds will normalize, so they expect cost of funds to decline by 18 basis points over the next few years. That will aid the ROA improvement of of about 11 basis points. And operating expenses, remember that SDFC Bank over the last few fiscals has been opening more and more branches. So Bernstein says that with the tapering down of incremental branches, their operating efficiency will improve, and that will again drive 10 to 11 basis points in terms of the ROA improvement. Back to you.
Okay, well, Abhishek, thank you very much for that. We are now at the 200 sort of point mark, 23,740 on the Nifty. So looking very, very solid. We are taking a quick commercial break. Jay Bala of cashthechaos.com will be with us on the other side. Stay tuned.
Well, we're 5 minutes to close in what promises to be a record-breaking session. The Nifty is now up 200 points. The Nifty Bank just 15 points shy of a 1,000-point up move, even as the Midcap Index is underperforming in today's trading session with a cut of almost 0.4%. Good time, actually, to get in Jay Bala of Cash the Chaos joining in on the show. Jay, it's been a one-way up move that we've seen on the Nifty Bank from the middle of last week, barring a couple of days of pause for breath. Where do you see it go from here? In fact, as we speak, Nifty Bank gains have hit the 4-digit mark, 1,000 points on that index, 52,700.
Yeah, good to be here, Mangalam. The long-term resistance for the banking index comes at about 54,000 to 56,000. So I think that's the attempt that's being made. It's mainly driven by the private sector banks, in particular by HDFC Bank, although I like Axis Bank more than HDFC Bank. And but the upsides are probably getting capped because the resistance I'm talking about is a very long-term resistance starting from about 2010. So the banking sector is likely to face stiff resistance around 54,000 to 55,000 mark. So a little bit caution there, tempered bullishness here.
What are the other trades that you would recommend, ex of these private sector banks?
Yeah, I have a general theme going on. That is a broad theme that's going on. For me, it's the green theme that Prashant spoke for just a few moments ago. I have a couple of calls on renewables. One is the Borosil Renewables, solar energy company. The stock is looking like it's breaking out from a short-term consolidation. The stop loss comes at about 460, and it has potential to scale to fresh all-time highs somewhere close to 830 plus. So I have a price objective for about 840 for the stock. But it's traded very volatile, so we need to position sizes very carefully. And another one is Ultra Green Energy. The stock has potential to scale about 2300 and a stop loss at about 1660 for this whole green energy thing.
What about Amar Raja, now locked in an upper circuit of about 20%? Is there a kind of breakout that you see for Amar Raja?
Yeah, the stock is still bullish. It's still got unfinished upsides to work with. But if you want to look at something else in this, I don't think this is the stock you want to be at, because it's extremely overstretched and the risk rewards are very skewed. Probably if you were to put in incremental positions, the reward will be something like 1.5 for a risk of about 2. So that's not what you're looking at. So you can use the trading stuff about 1575 for the stock and keep a hold on it.
On Nifty Bank now, Jay, have you sort of given us levels? You talked about individual names. So if we read about 52,660, 52,700. So here, what are the levels?
Yeah, the nearest resistance is 5,400, and the support comes at about something like 49,990. So it's the resistance. I think 5,400 is going to put a cap on this rally. When it comes to the Nifty itself, which we haven't spoken about, as I said last week, as long as the overall market stays about 23,300, the trajectory continues to be up. But I think the market is aiming for 24,095. It's 24,025. It's a big resistance for the Nifty. And the drive for the Nifty and the banking index is coming from the attempt of HDFC Bank to clock fresh all-time highs past the 14,400 mark. So, probably the sentiment is coming from HDFC, but probably more upsides to work with in other private sector banks like ICICI and Axis.
Any other sort of trends or... because, I mean, there's sort of what you're saying, PSUs, for the PSE index, for example, have you sort of scanned through some of these sectors and how they're poised?
Yeah, the PSE sector is looking quite tired, and it needs a sharp pullback for it to rejuvenate. And the same goes for the other PSU banking index too. It's just mainly SBI. But when it comes to the other names, I have a backup on a tech stock, which is Black Box. It's an IT stock, and if the stock were to close above today's high, I think it has potential to scale all-time highs to about 425. So this is just a backup. I'm not so bullish on the IT names because IT has got limited upsides, in my opinion, somewhere close to about 36,500. So Black Box is just a backup, 211 stop, and objective of 425.
All right. Thank you so much, Jay, for joining in. We'll take your leave for now on the show as we begin to wrap up what was a historic trading session. Once again, today, the Nifty Bank up almost in 4 digits, closing the day with about 900 points of gains. That was really, the story of the day. Financials doing extremely well, and as a result of which, the Nifty hitting a fresh record high as well, closing above 23,700, conquering 23,700 and closing above that for the first time ever. The top gainers, understandably, financials itself. So we had HDFC Bank, which is the top contributor, followed by ICICI Bank, Axis Bank doing extremely well, and then the financials like Shriram Finance and others are not doing too badly as well. The second half of trade also saw some gains in the IT pack. So the IT index too ended at the high point of trade, led by gains from names like Wipro and Tech Mahindra itself. On the way down, though, we did see some weakness in names like Eicher Motors, Power Grid, Asian Paints, Tata Steel, BPCL and ONGC. But it was the broader markets which were underperforming today, and we end the day with about 1,300 stocks which are declining versus about 1,100 stocks which are advancing. Prima.
The mid-cap index too ends with a cut of about 0.4%. The Nifty small-cap index managed to close up in the green, but it's a very modest gain of about 0.2%. The big gainers include Amar Raja, 19.5% higher on the back of the lithium-ion technology tie-up. Garden Reach Shipbuilders gains for the second day in a row, and big gains coming through, 10% up today. You also had strength in many of the mid-cap banks. So something like a City Union Bank also topped the charts, and PNB Gills in the financial pack also higher. On the way down, Happiest Minds corrected a fair bit on the back of the block deal which took place. Bandhan Bank too down nearly 2%.
Absolutely, and it's a good close. It's a superb close actually on the Nifty and the Nifty Bank. The broader market looking a little down and out, but that's okay. As I said right at the beginning, for a sector which has not done very much to really start to pull its weight, I think it is good news. And of course, it had support in a much lesser sense from the